Hello, and welcome to this LP3 loan management software training. In this video, we'll be reviewing the loan details section of the account record. This section provides all the essential details about the loan amount, financing, terms, payment, payoff status, and other important information. AMT FIN, term LN, amount financed, term, and loan. The amount financed is the total amount of the loan financed. Example is $1,000. Term is the period of time for repaying the loan, usually in months, but may vary depending on state regulations. The example is 12 months. Loan is how many times the customer has been on the same amount financed in term. The example here is one time. High credit term. High credit is the most a customer can borrow, and term is the max length of time for repayment of the loan. This section is restricted to manager and supervisor access defined by company policy. An example of needing to change the high credit or term would be if the customer is late in making payments, and a manager might lower the high credit amount to make sure the customer was not refinanced at the original high credit amount at some point in the future. Date made, date the loan was made to the customer. First pay date, first expected payday for the loan, usually around 1 month from when the loan was created. In this example, the loan was created 9/30/24, and the first payday date can be changed to a few days later to account for the first payment falling on a weekend, making it more convenient for the customer to make the payment. Security. If the loan was secured by property or a vehicle or some other type of asset, this section would have information about the security used. Some examples would be U for unsecured, A for auto, P for property, or other. Insurance. Insurance will not be covered in this lesson, and if necessary, this will be covered in an additional lesson. Most loans do not use insurance. Handling charge. Additional administrative charges that may be applied to the customer's account if state law or company policy allows. ACQ charge. Acquisition charge is a setup fee defined by the company as additional charges to the customer for taking out the loan. The software restricts this amount to not exceed state or company defined maximums. FC refund. Finance charge refund based on refunding method defined by loan type and state law. This is the amount of interest the customer would avoid paying if paid before the maturity date. This is normally unaccrued interest. Late fee. Late fee that will be applied to the loan after each payment is past 10 days due. Different loan types in different states may have another period of time before the late fee may be applied to the account. Security info button. If a car or another item was used to secure the loan, information for that item can be accessed using the security info button. A pop-up screen will appear and have more detailed information on the item. INS refund, insurance refund. Again, insurance fields will not be covered in this lesson. Balance. Balance is the total balance of the loan, including interest and fees. Payoff IF. Payoff in full, amount at any given time, which changes daily. Payoff is balance minus refund. Refund is unearned interest. First pay, first payment amount. Regular pay, regular payment for the loan that is expected every specified payment cycle. Example here is $133.75 due monthly. Last payment, final loan payment amount of $133.75 for this loan. Sometimes, depending on the amount of months and payments, the first payment may be different from the last. That is why there is a first, regular, and last payment amount, just in case. Insurance info button. Insurance will not be covered in this lesson. Maturity. Date the loan will be expected to be paid off. Total payments. Totals of all payments including interest and fees. Loan type. Loan types can be FB, former borrower, BR, borrower renew, NC, no cash renewal, NL, new loan, SML means small regulated loan, O means open loan. LRG means large installment loan. Additionally, in this example, under the loan type is the last amount the customer R for renewed or refinanced their loan, $1,000. Due day, when the loan is due, and if it's weekly, bi-weekly, or other. This loan is due M for monthly on the first of each month. Miss fees, miscellaneous fees. Any miscellaneous fees that can be applied to the account. This is dependent on state licensing requirements and company policy. That concludes the overview of the loan details section of the account record. Thanks for your time watching. See you in the next lesson.